So private banking is an exciting business to be in. First of all, we deal with an amazing amount of intangibles. We're trying to deal with money, but not money per se, money in the context of families, the preservation of wealth, the transmission of wealth, and we have an intimate access to these families. And this is not something which is going to be replaced easily. And it's also something which in Asia Pacific is totally under-penetrated. If you look at the statistics, it looks like the penetration of private banking in terms of managing people's money is below 40%. Second, this region is growing by strong double digits. It's already the first region actually in the world for the very first time in terms of numbers of millionaires and their assets, their cumulative assets. It's even bigger than the US for the very first time this year, actually last year. And therefore wealth creation will continue. The need for generation transfer and preserving and growing the wealth will continue to be excited. So the question now is, will it be always what it used to be, a one-by-one relationship manager by relationship manager to a client and to the next client? I think this is going to be a bit more different. It will be supported by technologies which will actually bring these vast level of information to the client, who will be much more empowered to take decisions. And there's a shift of power, and that's the most important statement I would like to make, from the company who used to decide when to talk and what to talk about, to the clients being empowered by the company to actually pick up the conversation whenever they want it on the topic they want to talk about. And this shift of power from the company to the client has taken place around the world in every other industries. It's going to happen in banking. As a result, the bank will also be much more on a reactive footing, losing some control, and needs to accept to lose the control. Because as soon as I disseminate the point of view of Credit Suisse Chief Investment Officer to the 125,000 clients of Credit Suisse, everyone servicing these clients should be in the know of these statements. And actually, it's impossible. So there is a loss of control, there's a shift of power, and it is pretty much to the benefit of a better service, because it will create a high level of engagement on topics which are more relevant to clients. But the bankers needs to accept is no longer in control, in full control. The process of innovation has changed. It has to be totally client-centric, first statement. Second, it had to be first put as a philosophy, a statement which says, fail fast to learn fast, as opposed to this famous failure avoidance that, big institution would actually cultivate. Third, in terms of philosophy of innovation, you need to privilege small teams, because small is beautiful for at least one reason. Small teams are totally accountable. And fourth, you may not believe anymore in this concept of innovation by committee. Remember the famous steering committees that most of the banks are still using, or large institutions, where you take decision every month. When you go digital and you go innovation, you take decision on the fly, and you take decision on testing, prototyping, users' feedback. So ultimately, what this culture defines is a culture where sharing is more important than owning. The organization is less important than the community. Failing matters more than failure avoidance, as I said it. And the hierarchy is pretty flat in this kind of organization. So going digital for a large organization like Credit Suisse, or any organization which would be on the traditional side of the business, is a radical change of culture. So I wouldn't say this would be a guarantee of success. I would refer to the necessity to offer a multi-channel for the long term. If you would not have it, you would still be in a position to be a niche player for the very few people who actually fear technology, don't trust technology, or would rather always have a preference for personal contact. There was a survey a year and a half ago done by Capgemini in the context of their wealth report. And they mentioned that 28% of the Asians have a strong preference for the traditional contact with the relationship manager. The interesting number is that 34% already having a preference for digital. And the one in the middle will switch in one or the other camp, but you can imagine that they will more likely go on the camp of the digital. There's room for more people and more service deliveries than one type, but not having a multi-channel is being defined as becoming obsolete within 5 years. In the same study, the propensity expressed by any Asian clients of financial institutions in wealth management in Asia, the propensity to leave that company who would not have access or provide access to clients via digital is 83% within 5 years. So for me, is it a guarantee? I think it's a must-have. It's no longer a nice-to-have. Is it the only way to be in private banking? Maybe not, provided you decide to be a niche player.